everybody, it's Friday and it's me, Buffy, and I am here today on Cinco de Mayo. So I hope you get a chance to get out and celebrate because I know I will. All right, thank you for joining me today. It is May's first episode of the Weekly Market Insight series, which is coming directly from the Capital Markets Trading Desk. You guessed it, right here at Sunwest Mortgage Company. Let's get into it. Investors are paying close attention to policy comments and economic data amid lingering concerns about financial stability and price pressure. The U.S. Federal Reserve did what almost everyone said it would do, raising interest rates by a quarter percentage point and hinting it could be the final move in the most aggressive tightening campaign. Fed Chair Powell also signaled that it may now pause its streak of 10 rate hikes, which have made borrowing for consumers and businesses steadily more expensive. He said the Fed would also monitor other factors, including the turmoil in the banking sector, to determine whether to pause its rate hikes. In doing so, he said the central bank would set its rate policy on a meeting-to-meeting basis. In his statement, Powell did make it clear that he doesn't think its string of rate hikes have sufficiently cooled the economy, the job market, and inflation so far. Even so, inflation has dropped from a peak of 9.1% in June to 5% in March, but still remains well above the Fed's 2% target rate. Treasury yields are lower as traders seek out havens, while a measure of the dollar is weakening as traders eye recession risks alongside a potential pause in interest rate hikes. Oil futures have slumped to around $70 a barrel. On-demand worries as the global economy slows. Moving on, U.S. companies increased payrolls in April by the most in 9 months, highlighting a resilient labor market even as the economy cools. Private payrolls rose 296,000 last month following a revised 142,000 increase in March. Applications for U.S. unemployment benefits rose by the most in 6 weeks. Initial unemployment claims rose by 13,000 to 242,000 in the week ending April 29th. Continuing claims fell by 38,000 to 1.81 million in the week ending April 22nd. U.S. worker productivity decreased at a 2.7 annual rate in the first quarter, and labor costs accelerated to a 6.3% rate after rising 3.3% in the prior period, underscoring a challenging inflation fight for the Federal Reserve. The Stoxx Europe 600 index held losses after the ECB expectedly delivered its smallest interest rate hike of a quarter point to take its benchmark to 3.25%. Now on to the housing market. Yep. The Mortgage Bankers Association noted a slight decrease in mortgage applications during the week ending April 28th. There is a 1.2% decrease in MBA's seasonally adjusted market composite index. The refinance index rose 1% compared to the prior week. The seasonally adjusted purchase index decreased 2% from 1 week earlier. Markets are likely to remain volatile, and we do not think the economic conditions for a sustained upturn are yet in place. The inflation data due next week will provide a better indication of pressure points for a market governed by central banks. Well, that's all I have for this week, everybody. Please, as always, join me again next week for more market updates. As usual, stay updated with our news, and our trading desk will keep you informed with our pricing incentives. Again, it is Cinco de Mayo. Get out and celebrate. Have a great weekend. Buffy, out.